by the way, when it comes to that nasty self-employment tax that people feel like they're always getting hit with that they didn't plan for, if they're working for your family business, we're going to take a look at family employees. Now, if they're 21 or under and they're your children, they may not be subject to tax withholding. You're not subject to Social Security and Medicare taxes until the child reaches age 21. Let's get this straight. We got rid of the federal tax, perhaps, up to a certain amount. We got rid of the state tax, perhaps, up to a certain amount. And we got rid of the employment taxes up to a certain amount. So rather than keeping $7,500 in your pocket after taxes, you may be able to pay your child $15,000. But as a family unit, if you view yourself as a family, instead of only having $7,500 in the family, now you have $15,000 in your pocket at the end of the year. Can it get any better? Well, perhaps it can. What about if, since your child has earned income, you work with your financial advisor? Now, in my case, I'm a financial advisor and a CPA, so that's one of the advantages I can put together for you if you decide to work with me. If you want to work with me on this strategy, feel free to contact me. What they can actually do is you can qualify to set up IRA for your children. So get this, you don't get a deduction for that the year when you set it up, but later on you actually will be able to deduct. You'll actually be able to have the earnings and you'll get the money back. You'll get it back tax-free. So hypothetically, you paid taxes before you put it in. You don't have to pay tax on it again when you take it out with a Roth. Now, when you're earning below the standard deduction, that means you never paid taxes on it. However, you can still qualify because you have earned income to set up a Roth for your children, which that means your children can set up an investment account and they can invest and grow their money. You never paid income taxes on it as a family because you took a deduction for your kids and for your business. Your kids get to put it into a Roth, and since they didn't pay taxes on it before, but it's in a Roth, they're going to be able to take it out tax-free in the future when they need it, and all the growth for their entire life in the Roth is going to be tax-free. So that's my tip for the day for you, my viewers, Max Drew CPA. If you want to do this strategy, there is some complexity to it. I believe you're going to definitely want to work with your CPA and financial planner to get the right consultation. Make sure you understand the fine points and realize that there are some legal obligations that you have to meet in order that this is going to be truly tax-free on all levels.